A signature done in friendship and debt for life. The real truth about becoming a loan guarantor. It's around 10:30 at night. Suddenly, the phone screen lights up and a message appears. Bank legal notice. The moment you read it, your heartbeat gets faster. For a few seconds, your mind cannot even understand why this notice has arrived. You never took any loan, so why is the bank asking you for money? But the moment you remember that a few years ago, you had done just one signature for a friend, everything slowly starts becoming clear. That same signature, which felt like nothing more than help that day, is now standing in front of you as a legal responsibility. The fear is, what if this matter reaches the court? And the curiosity is, can becoming the guarantor of someone else's loan really trap your life in that same debt? In our society, friendship and relationships hold great importance. Many times, a friend, relative, or colleague says to you, just do this small favor, the bank needs a guarantor. At that moment, it sounds very simple. People think that if the other person is honest and has a job, the loan will be repaid easily. So, without thinking too much, they sign the documents. But very few people truly understand what the legal meaning of that signature is. In reality, becoming a loan guarantor is not just a formality. In the eyes of the law, a guarantor is just as responsible for that loan as the person who actually took it. This means that if the main borrower, meaning the principal debtor, fails to repay the loan, the bank can directly ask the guarantor for the money. Many people think that the bank will first recover from the borrower and only then come to the guarantor. But the reality is different. In Indian law, the responsibility of a guarantee is taken very seriously. In the Indian Contract Act 1872, there are several important provisions related to guarantee. Section 126 defines what a contract of guarantee is. According to this section, if a person gives a guarantee for the debt or obligation of another person, then he legally accepts responsibility for that debt. In other words, you did not just make a recommendation, you entered into a legal contract. But the most important, and for many people the most dangerous provision is Section 128. According to this section, the liability of the guarantor is coextensive. This means that the guarantor's responsibility is equal to that of the principal debtor. The bank has the right to demand the full amount directly from the guarantor as well. The law does not say that the bank must go only after the borrower first. That is why many times banks send notices directly to the guarantor, especially when they feel that the guarantor's financial condition is stronger or that recovery from him will be easier. This situation shocks many people because they feel that they had only helped, but suddenly they themselves become a debtor. Now the question arises, if the person who took the loan stops paying the EMI, then what all can happen to the guarantor? The first impact is financial. The moment the loan defaults, the bank can send a notice to the guarantor. In that notice, the bank can demand the entire outstanding amount, along with interest and penalty. If the guarantor does not pay, the bank can begin legal action. In many cases in India, it has been seen that banks start recovery proceedings. If the loan is secured, like a home loan, then the bank can seize that property. But if the bank feels that the guarantor has more property or a stable income, then it can start the recovery process against the guarantor as well. After a court order, money can even be deducted from your salary. Another serious effect of this situation is on the credit score. In today's time, your CIBIL score or credit score has become your financial identity. When a loan defaults, its record is not entered only in the name of the borrower, but also in the name of the guarantor. This means that if the loan is not repaid, the guarantor's credit score can also fall. The impact of a falling credit score may not be visible immediately, but it can become a major problem in the future. When you yourself try to take a home loan, car loan, or business loan, the bank will look at your old records. If it sees a loan default there, then the bank may treat you as a high-risk borrower, and your loan application can be rejected. Many people also ask whether a guarantor can go to jail. The answer is a little complex, but important to understand. Usually, a person is not sent to jail just because a loan has not been repaid, because this is a civil liability, not a criminal offense. In other words, it is a financial dispute, not a crime. But this does not mean the matter is light. If the matter goes to court and the court orders that the guarantor must make the payment, but he knowingly does not follow the order, then the court can take action under contempt of court or other legal provisions. So the direct risk of jail is low, but the legal troubles and financial pressure can be extremely serious. There have been many such cases in history where people became guarantors only because of friendship or relationships and later suffered heavy losses. Many times, the main borrower went abroad or became bankrupt, and the entire responsibility fell on the guarantor. This situation becomes difficult both emotionally and financially. But the law does not give only responsibilities. It also gives some rights. Under Section 140 of the Indian Contract Act, the guarantor is given an important right called the right of subrogation. This means that if the guarantor repays the bank's loan, then he can step into the shoes of the bank. In other words, he now has the right to recover that money from the main borrower. This means that if you have repaid the full loan to the bank, then legally you can demand that money back from the person for whom you had given the guarantee. You can even file a case against him in court. Although in practice this process can be long and complicated, the law does give you this right. Another important provision is Section 141. According to this, if the bank had any security belonging to the main borrower, such as property documents or gold collateral, and the bank released it without the guarantor's consent, then the guarantor's liability may be reduced. This means the bank too cannot act completely as it wishes. Today, the banking system in India has become quite developed. The Reserve Bank of India has also issued many guidelines to ensure that the loan process remains transparent. But even then, the decision to become a guarantor should always be taken only after careful thought. It is not just a signature, but a financial responsibility. Experts often advise that if you are becoming a guarantor, then you must first check a few things. First, understand whether the income of the person taking the loan is stable or not. It is important to estimate his job status, business stability, and repayment capacity. Many times, people sign under emotional pressure, but later that same decision becomes heavy. Another smart step can be to guarantee only a part of the total amount instead of the full amount. In many cases, banks allow partial guarantee. This can limit your responsibility. Of course, every bank's policy is different, so it is necessary to understand the terms first. Some financial advisors also suggest that if a person is taking a large loan, then he should also take term insurance. That way, if in an unfortunate situation he dies, the insurance amount can be used to repay the loan and the burden does not fall on the guarantor. In truth, the decision to become a loan guarantor is a balance between emotions and law. Helping someone is a good thing, but understanding the financial and legal risk is even more important. Many times, people sign only because of relationships, but the law does not look at relationships. It looks at the contract. And perhaps that is the biggest lesson of this entire story. The next time a friend or relative tells you, just do one signature, just give a guarantee, make sure you understand the entire law and responsibility hidden behind that signature. Because sometimes one small signature can turn into a lifetime of financial liability.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.